is run by two trends I think I would highlight. One, Morningstar so far we help make quick.
There were a number of big news stories in the month of March impacting fund performance. Obviously, there was the Japanese earthquake, there was political unrest in a number of countries, and this led to significant volatility in the markets. Interestingly, though, a number of the Morningstar Canada fund indices ended off the month flat. Now, Adam, perhaps we can begin by talking about the poorest performing category, though, the Japanese equity category.
Well, it wasn't surprising to see Japanese equities at the bottom of the list this month. They were actually down double digits in the days immediately following the earthquake, and even though they were able to gain some ground back, still ended down over 9% overall. There are ongoing concerns about the cleanup and relief efforts there, specifically in relation to the nuclear plants. And if the fallout from that isn't able to be contained, that will obviously have significant impact on any companies that have their production facilities in Japan, for example, automakers like Toyota and Honda.
Now, looking at the best performing categories, we had emerging markets at the top, and China specifically, the Greater China equity category was number 2. Tell us a little bit about the story there.
Well, when you look at the top performing categories, the main driver was Chinese manufacturing. Manufacturing obviously means requirements for lending and natural resources to use as inputs. So looking at the top performing funds within those categories, there was significant exposure to both Chinese banks and Chinese natural resource companies.
Great, thanks. And for more details on the monthly fund performance, you can have a look at our article on our website.